Alright, let's talk about something every beginner investor struggles with. Should I stick with ETFs or take a chance on individual stocks? It is a big question, and it can feel overwhelming. But here's the thing, this decision could define how quickly you reach your financial independence. Now, ETFs are the go for a lot of new investors, and for good reason. They're diversified, simple, and cheap. Imagine buying a single fund that tracks the entire Standard & Poor's 500. It's like owning a tiny piece of 500 of the biggest company in the US all at once. Over the last decade, that ETF has averaged a 12% annual return. That's what the definition of set it and forget it. But what about stock picking? Well, sure, it's more effort and risk, but it's also where the big money happens. Think about this. If you bought $1,000 worth of Amazon stock in 2010, it will be worth over $23,000 today. That's life-changing growth. And in case we haven't met, I'm Francisco, a PhD researcher in asset tokenization and an MIT innovator. Here to make investing less intimidating and more actionable for everyone. The real question is just about choosing ETFs or stock. It's about crafting a strategy that works for you. So in this video, I'm gonna talk about the pros and the cons, share real-world data, and help you figure out the best path for your financial future. Stick around, because by the end, you will have the clarity you need to start building wealth with confidence.
Yeah, you're scrolling through looking for the secrets to wealth while sipping your overpriced old milk latte. Let me hit you with one question. If you were building your dream team for an NBA championship, would you bet all your chips on LeBron James? Or would you assemble the squad of reliable talents from Space Jam? Not Space Jam 2, very bad movie. Now hold that thought, because today we're talking about investing in stocks versus ETFs. It's a heavyweight showdown, folks. Individual stocks, the MVPs of the investing world, versus ETFs, the ultimate team players. Let's break it all down. First, let's meet the contenders. On one side, we got individual stocks. Think of them like owning a piece of one company, Apple, Tesla, or your cousin's NFT startup. Just kidding. Don't do that. When you buy a stock, you're placing your bet on that specific company's success or failure. High risk, high reward. On the other side of the ring, we got ETFs, or exchange traded funds. An ETF is like a sampler platter at a restaurant. You're not committed at one dish, you're getting a little taste of everything. Stocks, bonds, commodities, you name it. This spreads out your risk, making a safer bet for cautious investors. Okay, let's break it down. Individual stocks, what are the pros? Well, first, potential for massive gains if you pick the right company. More control over your investment portfolio. The thrill of being your own boss. You like the Gordon Ramsay of investing. What are the cons? Well, high risk. If your company tanks, so does your money. Requires a ton of research and time, no shortcuts here. You're exposed to market volatility, one bad earnings report, and it's a roller coaster you didn't sign up for. ETFs, pros, diversification. You're spreading out your risk across multiple investments. Lower fees compared to mutual funds, a win for the frugal investor. And easy to buy, easy to sell, and way less stressful. What are the cons? Well, limited upside compared to individual stocks. You won't see that explosive growth, I'm sorry. Less control. You're following the market trends, not shaping them. And not as fun to brag about at parties. No one says, bro, I just crushed it with the Standard & Poor's 500 ETF. Now, which one is right for you? If you're like Bobby Axelrod, chasing the thrill of billions and kicking the ass of Chuck while putting the homework, stocks might be your jam. But if you're more like a Raymond Reddington, You value sleep, stability, and the slow grind to expand your empire around the world, slow and steady. ETFs are calling your name. And if you're Reddington, the FBI wants to speak with you. Here is the pro tip. You don't have to choose one or the other. Many savvy investors do both. Own a few individual stocks you believe in while balancing your portfolio with ETFs to manage risk. Or, as Hannah Montana will say, have the best of both worlds. Want to know how Francisco Money plays the game? I'll let you know on my personal strategy, but not financial advice. First, I got a couple ETFs to provide stability because I believe in the power of the turtle beating the rabbit. Second, I've got high conviction stocks, companies that I have researched like Sherlock Holmes on a caffeine high. And third, I rebalance regularly. Think of this as tidying up your financial house, Marie Kondo style. Even though I just watched one episode on Netflix because I was enjoying The Gentleman from Guy Ritchie. Much better show, actually. And you can find in the description of this video how you can get some shares of companies for free so you can start your journey today. Let's talk about specifics. Here are the 3 ETFs that have delivered strong performance over the past decade. Number 1, SPY. This is for people who enjoy James Bond movies, which includes 500 of the largest companies in the US, 11%. Second, EEM. This is for the ones who love to laugh with French cinema. These ETFs gives you worldwide exposure to markets that include China, India, and Brazil. It's 5%. And third, QQQ. This is for the aficionados of A24 movies. Focus on tech-heavy Nasdaq 100, 15% per year. Remember, past performance isn't a guarantee of future results. But if we could take the Marty McFly car and travel back 20 years ago when I was graduating from prom, I will have said to myself, buy this ETF every month for the rest of your life or you will regret it. Now, let's talk about some stocks that should definitely be on your radar. Number 1, Tesla. I'm putting this one in the large cap category. Why? Because I believe in Elon Musk's capacity to dominate the autonomous driving market worldwide. And if you're thinking long term, like next 15 years, Tesla is a strong contender. Number 2, Palantir. This medium cap stock caught my eye even before its IPO, which focused on building software infrastructure for defense and big data analytics. I think Palantir has the potential to grow into a $500 billion giant. And third, the mysterious tech innovator. This company is developing the technology that allow Mac computers to download local versions of large language models without a GPU. Intriguing, right? I actually covered this one in a previous video, so check it out. I call it the NVIDIA competitor. Check it out. Alright, my friend. There you have it. The ultimate guide of stocks versus ETFs. Remember, investing isn't a sprint, it's a marathon. Whether you go all in on individual stocks or play it cool with ETFs, the key is to start now and stay consistent. Smash that like button, drop a comment with your investing style, and don't forget to subscribe for more financial firepower. And remember, when it comes to building wealth, don't wait for the opportunity to knock your door. Do it yourself. And if you're sipping your coffee, make sure it's as bold as your financial moves. This is Francisco Money signing off. Now go build that dream team.